invest our hard-earned money and push Bitcoin to go to the moon, they profit from it. But its very fact discredits the Bitcoin network and makes it hard to attract new supporters. They decided to gradually abandon the Bitcoin network's support due to various circumstances. Glad to welcome you to the CoinPost channel. Today I suggest that we look into the video of one of our frequent guests under the heading Bitcoin exchange rate forecasts. But we will not talk about the price, but about the factors that harm the top currency. After all, as Sunny Decree correctly observed, you can't always analyze why Bitcoin price goes up or what will help increase its adoption. It's necessary to pay attention to destructive tendencies to be ready for them. Today in the video, we're trying to open our eyes and meet the cold, harsh reality of life. I'm asking everyone who did not do this earlier to click the subscribe button and join our community. Let's begin. The first problem that Sunny Decree highlighted is Bitcoin futures. He draws parallels between the news about the trader and founder of his own hedge fund, Paul Tudor Jones, who said he has almost 2% of his funds in Bitcoin. And after the media spread the news, there was an increase in the activity of trading futures on the CME exchange. The blogger is convinced that other major stock market players noticed this message and decided to dilute their investment portfolio with cryptocurrencies. But they are doing this not by buying Bitcoin, but through the futures, which are speculation on the Bitcoin price and not the purchase of the actual asset. Why is that bad? Well, first of all, the money of these major players from Wall Street doesn't come into Bitcoin. They just make money on volatility. And if we, like real Bitcoin advocates, invest our hard-earned money and push Bitcoin to go to the moon, they profit from it. Or they don't. It depends on whether a particular trader is in a short or long position. But the fact is that money in the futures market doesn't increase the capitalization of Bitcoin. Secondly, the futures market doesn't help Bitcoin adoption. For an institutional investor, Bitcoin is not a means of payment or accumulation. It's just a risky asset that can blow up. If I'm honest to myself and our viewers, it's worth mentioning that many people in the cryptocurrency community treat Bitcoin only as a way to make more dollars. But these people from the crypto community remember such simple things as not your keys, not your Bitcoin. They know how to use wallets and send transactions, thereby helping to increase the Bitcoin use at least a little. The Wall Street players cannot do this. They don't even imagine how to manage the funds themselves and not keep them on the securities account. Over time, life is gonna play a dirty trick with them. But until then, do not expect them to install Bitcoin wallets. Thirdly, it was the CME futures, as we learned in 2019, that were approved by the American authorities to pierce the Bitcoin bubble in December 2017. And they did it. And now there's a question. Is there any way that the increased activity in the regulated futures market is going to hinder the increase in the Bitcoin price on the spot market? Indeed, many people are guided by the position of a major player on CME, and right now, most of them are going for shorts. The bottom line, we have 3 problems with futures alone, but then we have 2 more bad signs for Bitcoin. As we know, on May 11th, the third halving took place on the Bitcoin network, and now the block reward is 6.25 BTC. As expected, this event led to a slight overload of the mempool and an increase in the average block production time up to 12 minutes. Therefore, most people are experiencing inconvenience due to the long confirmation of transactions, and they are complaining about the commission's growth. But the next recalculation of difficulty should solve this problem. If you saw our videos on the halving, then you know that I warned you about such a thing and advised not to plan any transactions in the next few days after it. But what I did not expect at all is that the miners were gonna remain online. In his video, Sunny Decree indicates that the hash rate dropped after the halving by 30%, from 136 to 95 exahash per second. I don't agree with him about this, because the hash rate in this range had been fluctuating even before the halving, and as we can see now, the network capacity has gone up. So we can't say that this is a hash rate drop like Bitcoin Cash had. Bitcoin miners withstood the blow of the halving, and like I said, I did not expect anything like that at all. But whether the hash rate slightly decreased or not, it's not a problem in itself. That's one way to put it. Sunny Decree asked the right question. What is going to happen to the network capacity if the price of Bitcoin falls? Please note that when the miners leave, they do not turn their ASICs into scrap metal, but simply turn them off until better times. Thus, we might find ourselves in a situation where we have a lot of unused equipment at 30, 40, and even 50% of the current hash rate. The threat is that someone can use them to attack the Bitcoin blockchain. This problem applies for a particular exchange or seller that will be left without coins due to the transaction cancellation through a 51% attack. But its very fact discredits the Bitcoin network and makes it hard to attract new supporters, meaning users. Let me know in the comments if you think that a 51% attack on Bitcoin is a real threat and how your attitude towards the top cryptocurrency will change if it actually happens. If you're enjoying this video, give it a thumbs up so that YouTube promotes the video and other people can see it too. And we're moving on to the most acute problem. The problem that is really concerning is the drop in the number of Bitcoin nodes. And thank you, Sunny Decree, for pointing that out. Look, over the past 90 days, we lost almost 20% of all nodes. And if we look at the dynamics over 2 years, the drop is 17%. Let me remind you that miners only collect transactions in blocks, but it's the nodes involved in checking and confirming them. If the miner gets a reward for the block and commission as a reward for work, then the node owners voluntarily spend their internet and computer resources without receiving any compensation for this. Therefore, it's not surprising that they decided to gradually abandon the Bitcoin network's support due to various circumstances. For example, they are tired of storing 277 gigabytes of blockchain on their hard drive, the size of which is constantly increasing. And the problem is not that some of the old school guys give up the nodes. The trouble is that the new people don't come in their place. So far, the current numbers for the nodes are not critical. By the way, the most conscious of Bitcoin adherents live in the US and Germany according to this map. But if the current trend continues, then the network will have to be saved by making educational videos about the importance of launching your own node and doing themed flash mobs. Because Bitcoin is alive and working as long as the network has full nodes that provide us all with the opportunity to interact with the blockchain by sending transactions. And without these same nodes, there will be neither cryptocurrency exchanges nor futures. Today we discussed 3 potential threats to Bitcoin, because cryptocurrency is not only freedom from banks, but it's also a responsibility. After all, when they say that the Bitcoin owner controls his money himself, it means they ensure their safety on their own. Never forget about that. I've only got to ask everyone who has not subscribed to our YouTube channel yet to do this right now. You will help us with the promotion, and we will thank you with our new videos. And that's all for today. Thank you for watching. It's the Coin Post channel. Subscribe and get enlightened.